Right. Good evening, everyone. It's a pleasure to be here, and I'm joined with a very nice and expert panel with Cyril Rousseau, who's the Director General of Finance at EIB, Giovanni Niero, who's Head of Capital Markets Development and ECA Financing at Enel Group, Timothée Jaulin, who's Head of ESG Development and Advocacy at Amundi, and last but not least, Izuru Kobayashi, who's Deputy Director General for Environmental Affairs at the Ministry of Economy, Trade and Industry of Japan. Just a couple of words of introduction. We have an obvious, very large and open panel thematics. Over the last 6 or 7 years, we've seen a lot of developments in the sustainable finance space, be it around the regulatory developments, obviously, as well as the collective ability to shift the trillions while fighting against greenwashing. A number of tools and data sets being developed, but at the same time, we're also sensing a what people have started to call a regulatory fatigue of a number of market players, as well as a number of ESG backlashes that have marked our collective watch of the market. In front of us, what do we have? Loads of debate are ongoing at the moment on the financing of transition, in the context where we now have, I'm gonna dare a certainty of its disordered dimension, contrary headwinds, geopolitics, and inflationary pressures, strong government support, more or less strong government support. So basically, one of the key questions we have to address is how can we secure common science-based global targets and global pace while accounting for diverging geographical realities, differentiated stakes among stakeholders, how to secure credible pathways, how to combine what we would call techno-solutionism, so technology answering all of our challenges, with genuine behavioral and societal, and I would even dare cognitive necessary transformation. So today, to explore the future of sustainable finance, we are going to be questioning the notion of pace of the transition across different geographies and how to ensure a move towards a common goal. We're going to be questioning the topic of targets and levers, including technologies, but not only, to achieve that transition and make it real and credible at entity or issuer level. And last, the question of its operationalization through financial and regulatory tools. So just to start with the topic of transition pace across geographies, Cyril, maybe we could start with you. The EIB has been a major sponsor of the EU taxonomy for very obvious reasons. We have a green taxonomy. We don't have a transitional taxonomy at the European Union level. How is EIB at the moment managing the binarity of the EU taxonomy with the need to organize or adapt to transition pathways and its disordered nature? So in short, should we push for the taxonomy to evolve in the coming years to be more explicit on transitional pathways?
Well, maybe I will start with reminding how we look at transition at EIB. For us, financing transition is two things. Financing activities that contribute to transition and activities that are compatible with the transition. And actually, when you look at this definition, what the EU taxonomy does is to provide a science-based framework to do that. So actually, the EU taxonomy is a transition finance instrument. You have science-based benchmarks to address what is a substantial contribution to the transition, and then with the DNSH, do not significantly harm principle, you have the answer to whether the activity you are financing is compatible with the transition. So this is actually what we use at EIB as a tool in order to guide all of our climate-related activities. We have adopted as a principle for those activities, and those activities are extremely important for the bank because being the EU climate bank, more than half of our activities are green activities. What we are doing is committing to gradually align with the EU taxonomy on all of our activities. It's a gradual alignment. If you take the example of the climate activities, in terms of substantial contribution, all of our activities are already aligned, with the exception of activities outside the EU, because the idea is not to impose the EU taxonomy everywhere, but in that case, then we adapt our approach in order to account for the local situation. And more generally, beyond significant substantial contribution for climate, we also are gradually implementing the other element of the taxonomy. It's difficult, we are facing data gaps, we are facing data quality issues, but it's actually, we think, the very reason why we have put in place within the EU taxonomy. It's to actually force the development of all of those data that we need, that the world needs, that investors need, in order to channel finance to what will contribute to the transition. So that being said, does it mean that everything is complete? You might say that, for instance, we are still lacking something for enabling activities that do not have a substantial contribution now, but that can help for a substantial contribution in the future. Is the taxonomy perfect? Honestly, it's a discovery process. We are right now learning by using the taxonomy. At EIB, you are also learning, and what I think will come now, and if you heard Commissioner McGuinness yesterday, that was clearly our message, is to provide the market feedback to the use of the taxonomy, where we think that it is not fit for purpose, and we heard it clearly yesterday. There is a willingness within the EU to get this feedback so that things can be refined when we review the delegated acts. And we also have a tool to do that within the EU with this advisory EU platform on sustainable finance that can be a vector to provide this feedback, and we will do, and I invite all of you to do it, to provide this feedback so that it can be refined. So my message is we have a powerful tool, we just need to continue improving it.
Fair enough, but the maybe Enel, Giovanni, you can give us a bit of a sense of your experience of monitoring your own transition, especially considering the geographical spread of your operations. So when you consider growing investors' expectation, flourishing sustainable finance regulation, and the heterogeneity of your countries of operation, what are the concrete challenges for Enel to deal with the transition imperative?
So Enel, a few words on Enel. Enel is a global energy player with business across 30 countries. We are leading the transition, I would say, with a portfolio of 62 gigawatts of renewables widely. Clearly, for us, it is relevant to address the transition in a proper way, also consider the diverse geographical footprint that we have. Out of 36 billion euros that we are going to invest in the next 3 years, 75% will be devoted to Europe, and more than 80% of these will be aligned to the European taxonomy, right? During our last years, I would say we learned the lesson that transition is a process. It's not that straightforward. It's not that linear. Challenges are multiple. Would name 3 kind of challenges. First, clearly, we have to deal with natural events. For instance, in 2022, the extreme drought across Spain and Italy forced us to switch from 7 terawatt-hour of hydro energy to conventional generation. Second issue, second challenge I will mention is clearly geopolitical context, right? Take the Russia-Ukraine conflict, for instance. Clearly in this context, what happened was the gas prices went up, the energy price clearly went up, and clearly the European governments took action to offset this situation. And through the national TSO, we were forced basically to maximize the production of our plants other than gas. And clearly we were forced to maximize the production of our coal power plants. Third, I would say clearly regulation, as you said before. Regulation, in particular European taxonomy. Look, I think what we did was clearly read the European taxonomy not only as a disclosure requirement, I would say, but as a strategic driver of our business. As I said, out of those 36 billion investments we are going to do in the next 3 years, we are committed for at least 80% for that to be aligned to the European taxonomy. And we, by the way, tied this objective to our last sustainability-linked transaction back in January this year. So this is to sum up what are the main challenges that as a player we are clearly exposed to.
Maybe Izuru, you could give us the Japanese perspective. So as we all know, Japan recently issued a very well-identified 11 billion climate transition bond to finance your industrial transition plan defined within the GX policies, which was a world first. Before we get in a bit later in the panel within the instrument itself, could you share with us what what's the underlying philosophy? How do you navigate between local specific company needs and specificities and Japan national commitments to global net zero target?
Well, thank you for the question. And yeah, well, Japan aims for net zero by 2050, and we hope our key industries to do the same. And we estimate more than 150 trillion yen or $1 trillion are needed just in the next 10 years to start this process. And it's additional to the normal investments. And to enable these investments, the government decided to provide the 20 trillion yen or $130 billion support programs. And these programs are financed by the proceeds of the climate transition bond and the 11 billion mentioned by Orith-san is a part of it. And the bond will be repaid by the proceeds from the emission trading system and also the carbon surcharge starting from 2026 and 2028 respectively. So actually companies can make investments for the transition before the pressure to the emission is significantly enhanced. That is the basic design of our green transformation strategy. And the significant part of the support programs actually goes to R&D and also demonstration projects. They include clean hydrogen, clean ammonia, CCS, batteries, and highly efficient power semiconductors, perovskite solar cells, and also floating offshore wind. We also go for the advanced reactors as well. And Japan has a very strong manufacturing sector, and the companies seems to be very keen to work with the government to implement these projects. And we also accelerate our energy transition efforts, which is like energy efficiency, deployment of renewables, restarting nuclear, and also promoting electrification, and of course the circular economy. And these investments basically need to be covered by the private finance. The government will, however, provide the subsidies and also the loan guarantees for these activities and finances, also using the proceeds of the climate transition bond. And I think these government strategies are very well understood by the private sectors of Japan, and it seems that they are happy to work with us.
Timothée, maybe a similar question to that to Giovanni, but applied to your reality as a very large investor. What will be interesting here is to hear how you articulate your very deep European roots and the big share of your assets that would be invested in Europe with the increasing standardization of what we do within finance and sustainable finance more specifically, with your very well also recognized strategy to invest in emerging countries to support both their energy transition, but also its just and fair dimension.
Well, as a European player, as you can imagine, it was natural for us to support global net zero goals. Naturally, we joined the Net Zero Asset Manager initiative, but then, of course, the question was, vis-à-vis our board, vis-à-vis our CEO, can this be compatible, given the fact that we have 1/4 of our total assets invested into emerging markets, given the fact that we are a global asset manager, therefore our saving products need to remain sufficiently diversified and invested across the economies. Our answer was, no head in the sand. I mean, the decarbonization objective is about decarbonizing the real economy, not the portfolio. It's about decarbonizing the global economy, not the carbon, not footprint, but the carbon overall emission of a given geography. So what we did, if you want, is to, for each and every net zero product we design and we manage, we have a minimum investment to keep in high climate impact sectors. Industries, transportation, energy sector, and so on and so forth, which require to engage the players in this sector to ensure that they're on the right track in terms of transitioning. And when it comes to emerging market, this is our #1 area of focus. Why? It's because we will not succeed in addressing climate change issues if we do not accelerate the transition in emerging market. Therefore, emerging market is everyone's business, and it should be front and center of every sustainable investor agenda. Now, in 2 minutes, how we address that, or how we try to approach decarbonization objective in emerging market.
Hence the question of pace and calibration, basically.
#1 is to have clear, universal objectives, but a differentiated approach. Giving you one example, coal. Universal objective and universal rule, we exclude all coal developers. We don't want to see new coal capacities being developed. In terms of coal phase out, 2030 objective in OECD, 2040 in emerging market, and we increase the financing that we direct towards the transition through PPPs. We have a great one with IFC, because we recognize that as a global actor, if we want to play our part, of course we can build nice impact funds invested directly into EM, but we need as well to have a well-functioning, deep, sustainable capital market pool. If you want to mobilize the trillions, that was part of your introduction, if you want to tap pools of saving and the deep pockets of insurance companies, pension funds, and so on and so forth, you need capital market instruments. That's really, really critical. And therefore, we train emerging market banks to make sure that they master, if you want, all these complex taxonomy requirements, PII requirements, and so on and so forth.
If we go in the how a bit more, and the targets, the levers that we have at hand to achieve this in a credible fashion this common goal. Giovanni, I think Enel has provided us a nice reality check in its with the recent SLB monitoring. In essence, Enel failed to meet its 2023 GHG emission reduction target, which was linked to a number of outstanding SLBs. Could you share with us the reasons? We could obviously guess a few of them. What have been the consequences, and what lessons have been drawn from that reality check, really? And what are the key levers for now to get back on track and on the admittedly very ambitious longer-term target, which I think is a very relevant, I would say, test case for the robustness of the SLB instrument.
Yeah, for sure. Clearly it represents a milestone in the overall sustainability-linked bond market, I would say. So the mystery finally unveiled. We missed the target. To provide a bit of context on what happened in 2023. Globally, greenhouse gas emissions continue to rise, right? And this clearly on the back of the recovery from the pandemic. And recurs to fossil fuels that clearly are cheaper, but more polluting, absolutely. When it comes to Enel, we were able to reduce by 30% if compared to 2022, our Scope 1 generation emissions. And clearly this was driven by the switch in our portfolio from conventional generation, closure of thermal plants, to renewables. Clearly what happened was on the back of as I said before, on the back of the Russia-Ukraine conflict, the Italian government, through the national TSO, basically adopted a strategy to maximize the energy production out of our coal power plants. And this was clearly driven by the necessity to protect households and these extreme high energy volatility and energy prices, right? So when it comes to, this is related to Italy, but when it comes also to Spain, the Spanish government forced us to postpone the closure of our As Pontes coal power plant. This was another factor. Clearly, here we landed to a level of 160 grams per kilowatt hour, but in brief, it was a reduction of 30% versus previous year. It was not enough. We achieved, as I said, 160 grams per kilowatt hour versus a target of 148. So what this implied? It implied that we have outstanding 10 bonds, 10 sustainability-linked bonds, 5 denominated in euro, 5 in dollars, which are tied to this target. And clearly, they will face the step up of 25 basis points with an economic impact of 80 million euros across the life of the bonds. So, lesson learned, I think we have demonstrated the fact that if targets are ambitious, failing is natural. It can happen. It's part of the process of the transition. And I think we demonstrated also that we are committed towards sustainability, towards the part of decarbonization. And we believe that investors remember, capital markets remember. So the approach of, you know what, exogenous factors, right? But what we do is the right choice. We will face a step up. And this was not detrimental for our reputation, not only for our reputation, but also for the sake of the market and to protect the market of sustainability-linked bonds. When it comes to our, let's say, future commitment, the trajectory is absolutely confirmed. Nothing has changed in terms of our trajectory. We are committed to close our coal power plants by 2027. We are committed to reduce our greenhouse gas emissions by 80% versus 2017 by 2030, and we will target net zero by 2040. So I think sustainability indeed, we believe, create more resilient companies, and this has been demonstrated also through this fact.
Thank you, fair enough. Timothée, maybe you could give us the investor perspective when it comes to funding the transition. We heard from Cyril that we already have a very strong tool that is yet to be refined to do so, which, by the way, is absolutely undebatable. But in some instances, you could consider it as a very nice reference, more than or benchmark, than really an ability to evaluate everything that is actually transitional. What is the arbitrage that between financing green enabling transition, how to ensure that you are supporting robust transition plan, and the notion of robustness and credibility is very acute here, that are anchored with both the social acceptability of these transitions, especially in the inflationary with the inflationary context we have observed, and the need to design everything with nature in the context more and more, and the protection of our ecosystem services.
Well, the first statement I'd like to make is that from a global standpoint, there shouldn't be any arbitrage. If you take the portfolio of savings of an individual, as well as the overall strategic asset allocation of an institutional investor, there is room for pure impact product, investing into green or directly supporting the fast transition of carbon-intensive assets. And clearly there is room for that, there is need for that. And you also need to activate the different levels you have for your core diversified portfolios. How we do so, it's very clear, through ESG integration, but taking into account the double materiality. That's critical for us. And we do so as well, not only in the way we assess issuers, in the way we tilt our portfolios, we do also integrate these issues in the way we engage companies. That is critical. We take the two perspectives into consideration. Now, when it comes to the specific buckets of transition impact finance, for us, you need either to have the right capital market instrument tools, SLBs were mentioned. We need to work together on having a more robust, I would say, higher integrity in this market. Nevertheless, there is high potential. There continues to be very high potential in SLL to ensure that the entire balance sheet of banks is also mobilized, not only the financing they provide to green assets. Now, when it comes to transition plan and assessing very large companies, there are, of course, tools, I would say, like the one provided by the green taxonomy are very useful. And I would concur with what Cyril said, actually. The taxonomy does cover areas of the economy which are not necessarily naturally seen as green. But, if I may say, it is way too complex for many of the target markets that we are talking about here in emerging markets and developing economies. But a very useful reference for sure.
But if I just do a small follow-up, and it's because we as a bank are 2 feet into it, the credibility of a transition plan cannot be only based on the aimed ambition. And I think the collective challenge is to both evaluate the credibility of all of the levers that are activated, the pace that is suggested, and how much it really matches the ambition, and And in a number of cases, the taxonomy benchmark is not enough to evaluate the quality of the pathway, if you agree. Maybe one word, Cyril, on this. EIB has been a very historical and massive issuer of use of proceeds green bonds, anchored with EU taxonomy, and very fully recognizing the powerful dimension of this common dictionary. Some of the key levers of credible transition go beyond. There's green assets. As you mentioned, green enabling is a topic that is very dear to me, and we hope to be providing some options and some guidance as part of ICMA to help frame green enabling activities, but also how to, beyond direct capex, strategy shifts, behavioral evolutions, overall means and governance to make it happen. What's the range of tools and levers that EIB has at hand to grasp all of the dimensions of the transition, which is not only projects and assets?
So actually, we have two kinds of levers for the transition. One are on projects. I already addressed them, and indeed, use of proceeds bonds showcase what we are doing, and indeed, we have issued close to 100 billion euro of green bonds over the last 17 years. But we have also other levers which are at client level. Just when staying at project level, beyond the taxonomy and the direction of our funding, we also have other levels to check also the adaptation of the project we are financing. So we are doing a systematic physical risk assessment of the project we are financing. And also we are assessing the transition risk by applying a shadow carbon price, which is now at 80 euros, but will reach 800 euros in 2050. So this is what we are doing as a lever at the project level. Now at client level, what we have put in place is a request, systematic request for all of our clients to develop a trajectory demonstrating their alignment with the Paris Agreement, including a decarbonization target. And if they don't have developed one yet, they have 1 year. Sometimes with exceptions, in certain situations, we grant 2 years, but they have a limited time to develop one. So this is one tool, one lever that we have. Another lever is that actually we exclude from our client base anyone who is actually contributing to damaging the transition. And for instance, we exclude clients that invest in the increase of fossil fuel production. Now we are not dogmatic, we are pragmatic. So to give you one example, this exclusion, we don't apply it to oil and gas industry if it is for projects that can have a very important potential for the decarbonization of this industry with innovative tools. So to give you an example, typically we would be ready to finance oil and gas companies for carbon capture project, because here we know that they are the ones that actually have the incentive to develop it, and even if right now they are contributing to the increase of oil production, it is even more important globally to actually develop those technologies that can achieve decarbonization of this industry in the future.
Thank you. It's music to my ears, and but it's sometimes very difficult to live by because very binary interpretation are all over the place. Izuru-san, maybe within the GX policy, by essence, you're recognizing the multi-lever necessity for Japan in its transition pathway for all sorts of reasons: geological, island, insular dimension of existing industrial mix, nuclear history, etc., is requiring Japan to be multi-lever. Could you please share with us what are the key levers? And they're completely underlying your transition bond product, and also the very intense necessity to scale up some of the green enabling activities and market segments are particularly acute for Japan, and green ammonia, lithium, cobalt, green H2, like everybody else, but in some areas most, even more for in the Japan context. So if you could both give us some sense on those two dimensions.
Well, I just would like to touch on the principle first. And the principle of GX strategy is actually to pursue net zero, economic growth, and the energy security simultaneously. And I think that's actually I think that's the same for the IRA of the United States or Green Deal of the European Commission. And I also think it is the only way for us and governments to justify mobilizing the huge resources needed to go for the net zero. And but we have the different conditions, national conditions. We have different contexts for the energy security, political situations, economic structure, so that the pathways needs to be different. So we call it one goal with various pathways. And that's the basic idea of GX policy as well. And with regard to the lever, we put a lot of importance onto the technology. And well, green enabling technology is a very good wording, and actually that's the very essential part of our GX program. And we need actually affordable clean hydrogen and also CCS to really decarbonize industries, especially the hard-to-abate sectors. And the challenge is that these technologies are not yet fully understanding of what the government is trying to do. And the actual Japanese companies, as I said, have the very strong capability in green enabling technologies. And hopefully we can take advantage of it. And it seems that they are very much happy to work with us.
Since I'm already over time, I'm going to have a very high-speed last round, starting with you, maybe Izuru. Obviously, you've lobbied very much for the transition label to emerge on the market. It has fueled all sorts of relevant questions and debates, especially on how you choose the eligibility criteria and the technical screening criteria. What would be your, and you're only allowed with 1 minute, what would be your recommendation for future transition labeled products? With the experience of this very extensive dialogue you've had with investors across the roadshow and the very extensive marketing and discussions you've done on the transaction.
Well, thank you for the question, actually. First, we really would like to appreciate all the questions and also advice we received for the climate transition bond. And we truly thank ICMA, G-Funds, and also CBI, and many other financial institutions for their support to our bond, and also the enthusiasm towards the transition finance. And regarding criteria for the use of the proceeds, actually I explained that we put a lot of importance onto the kind of technologies. And basically we prioritize the technologies that are very essential to deeply decarbonize Japan's industries and energy sectors. And the proceeds are used for the project, which is very difficult to be implemented only by the private sector. And we will issue a detailed allocation report by February next year, 1 year after the initial issuance of the bond. And hopefully we are able to communicate what we are doing in a very, very nice manner with the global investors. And with regard to the project criteria for the transition bonds in general, not only the bond that we issue, but bond in general, especially those issued by the hard-to-abate sector companies, I think it should be very important to include investments to reduce emissions from their ongoing operations. It still takes time for the hydrogen and CCS to be fully commercialized. And in the meantime, companies still need to reduce emissions from their ongoing operations. And especially when the free allocation of the emission units are actually decreased after 2026. for the EU ETS. And in case of Japan, we will start the ETS from that year. And also, it is very important to include investments to produce goods and the services that contribute to the emission reduction of their customers.
I'm forced to speed you, to ask you to go to conclusion, but what I'm really interested to hear is what's your key takeaway in terms of how you qualify the right pace and the right transitional element in the use of proceed format?
Well, that's actually a very important question, but it depends on the company, actually. I think the plan needs to be very realistic, not really realistic, but pragmatic and implementable. And the respective companies have a different pace. That's the same for the country. So I think it's important to have the very clear explanation and scenario to be able to communicate to the investors. I think that's something which we have been learning from the communication with investors.
And maybe, Giovanni, one last for you, because Enel's made a very clear choice around having a KPI-linked approach to support its transition strategy. I know it's beeping now. We're gonna close with that one. What's your forward-looking prognosis? Do we have the adequate financial instrument to genuinely support and accompany transition? What's your take on that? I'm a bit off script now.
I will be straight to the point. It was because it's happy hour time, right? So,
exactly.
So I would say there are future is made by three main components in sustainable finance, I would say. We are starting from the 3% of sustainable finance if compared to the overall global finance. So we have to increase that amount one way or another. There is use of proceeds kind of finance. It works. Out of those $7.7 trillion, 3.3 are green bonds. And thanks by the ICMA, by the way, the process is well addressed, I would say. And so we are all curious to understand if the EU green bond standard will provide additional liquidity to the market. Well, I'm curious, I would say. When it comes to sustainability-linked bonds, I think it is a market which is very young, just 5 years, but already $300 billion globally. So I think that also with the support of the ICMA, there is room for improvement. If there is room for improvement, I think the ICMA should support the improvement of such asset class. And clearly, from a regulatory perspective, I think there has to be equal treatment across different asset classes. So across use of proceeds kind of transactions and sustainability-linked kind of transactions. And third and last, I think, let's focus also on the issuer itself. I don't have the answer yet, but can we imagine one day that an issuer can be qualified as sustainable per se? So irrespectively of the fact that it's issuing either green, conventional, or sustainable bonds, right? Can we consider that any kind of finance that comes out of such an issuer could be considered as sustainable? So we have the product and we have the issuer. I don't know the answer yet, but I'm very curious to see what future would deserve.
One could argue, and that would be my last word, that the combination of a use of proceed and sustainability-linked instrument is probably the strongest commitment we could expect to both get the levers and the ambition within a given product. So
not in a single instrument, though.
In a single issuance.
Wow.
Thank you very much. We didn't have time to go through all what we wanted, but thank you very much for your answers. And I think we're closing with the last session.